The provisions of CGST law say that the payment to the vendor should be made within 180 days from the date of the invoice. We know that large companies have documentation issues, internal control provisions strict, which does not enable them to even record the invoice within 180 days. So what happens when an invoice is received after 180 days and the payment is made? Will it still be ineligible because it is accounted after 180 days?
So under the GST law, I can take credit on immediately receipt of the invoice. Right? So the fact that I have received the goods or services and accounted, I can kind of take credit. I don't have to wait for making payment to the vendor. But the exception created in the law is to say that under section 16.4, so long as you have taken credit, the law says that you should pay to the vendor and the payment is 180 days. If you don't pay within 180 days, what the law says is reverse the ITC with interest and take back whenever you have made the payment. As you brought out, there could be scenarios where it could be something which is stray or otherwise, where companies account itself after 180 days. So what happens in those cases is at the time of accounting that invoice, it has kind of gone beyond 180 days. So they can't kind of take credit immediately. They'll have to wait for payment. More often, the ERP is so designed that the fact that they have accounted, they don't look at whether it is within 180 days or otherwise. Immediately credit is taken.
Okay.
So then that creates a casting liability. So there is where the checks and balances have to be built in. So there could be two choices. One is have a check and balance to say wherever the invoice is beyond a particular date, which is not closer to 180, reject it, get a fresh invoice. Or if there is something which you want to still account it, ensure that you account but don't take the credit and take it only on payment.